Hey guys, Crypto Sunday, and it's been a very strange week in the crypto market, I think. I wasn't really expecting this. I'm down 1%, a little bit less than 1%, about £3,000. Considering the tariff saga, we're sort of down 8.5%. I mentioned yesterday on the Nasdaq, sort of 8% on the S&P. So 1% on crypto. Obviously, it's down a fair bit from the top, but kind of expected a bigger drop, at least on the 2 days that the stocks were down sort of 4.5%. A lot of people are still calling Bitcoin sort of leveraged Nasdaq, basically, and I don't know, maybe it's due a downturn in the coming weeks, but so far it hasn't been. Looking at the CoinShares report, they're putting it in this new sort of more detailed format now. We saw 226 million of inflows. This is obviously still a little bit old. The report came out on March 31st, so it's the week before this week just gone. Looking at by country, they give first sort of still largely a mixed bag, sort of all mostly single digit inflows and outflows, apart from Switzerland, 14 million. But yeah, some sort of other countries, and then a couple 100 million into the US. And looking by asset, it is still fairly small numbers, 195 into Bitcoin, 15 into Ethereum, a tiny little change, no change basically in the multi-asset. 7.8 million into Solana and 4.8 into XRP. First time sort of Solana's been above XRP for a good while. 4 million into Sui, which is unusual, sort of 1% of assets under management. Surprised that Sui has got over a third of XRP's assets, so that's a little bit surprising. A little bit into Cardano, a little bit come out of short Bitcoin and sort of others. Something new that they are giving is sort of the top inflows and outflows out of more than just spot products. So top inflows in the top three is a 2x levered Ethereum ETF. You got sort of various high income and sort of other strategies on Bitcoin that we sort of kind of knew was potentially coming with options and that sort of thing. And then outflows, there is quite a few derivative bets in here. So you've got $7.2 million, it looks like, out of the Ultra, I guess that's a 3x Bitcoin ETF. Could be a 2x. But yeah, so we're seeing, 2x Bitcoin strategy funds and a little bit out of ultra short Ethereum. Maybe people sort of thinking that that's had a good run. They're probably taking a little bit of profit, but yeah, sort of interesting to see some of these outflows, especially into the derivative products. And on to this week's inflows and outflows. It'll be a net outflow week. We had 3 days in a row of outflows, 93, 60, and 157. One large day of inflows, even with BlackRock having 115 of outflow. Inflows going into Fidelity and ARK, as well as the new Grayscale and Bitwise small amounts. So 218, and then a 99 million outflow day, albeit with 65 million of inflows into BlackRock. So that was interesting. And Ethereum still seeing very, very little. We did have one positive day that wasn't sort of speculation on arbitrage that I thought that last one was. This is into Fidelity at least. But yeah, 6.4 million and then 3 days of outflows with a 50 million. Some of that out of Grayscale, to be fair. So that's just continuous trickling out, and then a little 3 million outflow, 2 million inflow. So very little happening on Ethereum, but people are excited for the future, of course, still. And then, so where is this buying coming from? A lot of speculation that Bitcoin is holding up reasonably well because there are large structural buyers and not sort of just because the asset is doing well. MicroStrategy last Monday announced that they bought 22,000 Bitcoin, obviously in the previous few days. They won't have bought it on March the 31st. But yeah, that was 1.92 billion's worth at 86,969 per Bitcoin. So it brings them to 528,185 and increasing their average price from about 66.5, I think, to 67,458. Still a reasonable price, I suppose. There is, I guess, potential that it could drop down to here. Well, maybe in all this tariff saga and potential recession or whatever. But I would think also possibly in the next bear market, whether that's next year or the year after or whenever it comes, there's potential it could drop to 67. So that is sort of a risk still. And a lot of people are sort of now maybe starting to get a little bit annoyed and don't have the same sort of positivity when they see, 20,000 Bitcoin purchased as they did sort of last year. You get people calling him a crackhead and saying that it's getting a little bit too much. Noted the GameStop news last week. We haven't heard an official note that they have bought, but they did get their upsized 1.48 billion in convertible notes, and presumably that has trickled into the bank. So whether they have been buying this week and potentially propping up the price, I suppose, that is a possibility, certainly. We don't know if they're going to spend some of their, I think it was 5 billion in cash also on Bitcoin. They seem to be just preferring to go the MicroStrategy route, which some people aren't very happy with, and they stock ends up getting shorted. Stock dropped 23%. So yeah, people are unsurprisingly not very happy. I think they would rather that they just spent maybe half of their 5 billion in cash on Bitcoin, and whatever they want to do with the rest, it just seems to be sitting there. So yeah, you've got GameStop as well. And in other news, Tether. This isn't sort of recent. This is in Q1. So in the last 3 months, Tether have bought 735 million in Bitcoin, bringing their total to $8.2 billion, which, 8,888 Bitcoin. Whether they sort of made that exactly that for any particular reason. I think it's lucky China numbers, isn't it? But yeah, they hold rather a lot, and you'd probably see this as more positive because they are just buying Bitcoin with profits from their enormous US Treasury holding, the income that they get from that. So this isn't borrowing money to buy Bitcoin that could get liquidated. They're just earning money and spending that on Bitcoin, and there's nobody that can, in theory, take it away from them, even if Tether sort of were to drop and they have to sort of sell their treasuries and redeem all the Tether. This, they have sort of made it quite clear this is excess reserves. It was bought with profit, and they have enough reserves to sort of refund everyone if necessary, and they would still have this Bitcoin. Whether that would be true in practice, you don't really know. But yeah, pretty good news. This was interesting. I'm not sure if I'd say good news or bad news, really, either way. Hut 8 and Eric Trump, and I believe Donald Trump Jr., have merged a sort of new company out of the mining assets of Hut 8 and a data center company that they had. They're now calling it American Bitcoin. They merged the mining operations for an 80% stake in American data centers, and yeah, Eric Trump and Donald Trump Jr. have sort of launched this American Bitcoin. So there's now a Trump family owned Bitcoin miner. So we'll probably see this as a sort of green light, good news for miners, that it's more of an official industry, if you like. The negative, I suppose, is that they want to grow American Bitcoin. I think Hut 8 are at sort of 7 or 8 exahash or something. I haven't really kept up too much with them, but they're saying that they want to push this to 50. Everyone's saying that they want to get to 50. It seems to be the magic number. So yeah, that's sort of, I don't know how fast they want to expand this, but yeah, them getting to 50 is obviously going to push hash rate up and difficulty up, and everyone will get a little bit less Bitcoin. You've got sort of a load from Iron getting added in the next few months, a load from Hive getting added. So yeah, you could quite easily have 100 exahash sort of added over the next 6 months maybe. There was that car company as well in Japan, I think it was, sort of adding like 20, 25 exahash. So yeah, profitability is going to be going down, and I'll say, as I've said before, if we do get a decent run on the miners, I would probably be getting out and not getting back in again. So we saw this before all the tariff news, but I expect we're going to be seeing an awful lot more of this this sort of thing coming out of China. The big banks, shares were doing quite well. They introduced a $72 billion capital injection, 520 billion Chinese yuan. Banks issuing new shares basically, and well, yeah, because they're state-owned banks. It's essentially China stimulus. Can't read the whole thing, but you sort of get the idea. It's China sort of wanting to stimulate their economy because it is faltering a little bit, and now off the back of tariffs, there's sort of talk about more stimulus, devaluing the yuan potentially after the dollar has taken a reasonable down move. They sort of were potentially waiting for that before doing large amounts of stimulus, and yeah, we're sort of potentially getting more money printing, and I keep saying maybe too much focus being put on the US and whether the Fed are doing sort of QE or secret QE, and not enough on view on the rest of the world. It's sort of been pointed out in 2017. The Fed and the US were effectively tightening, and it was sort of rest of the world stimulus that was propelling the crypto market forward. I don't look at the fear and greed indexes all that much because I think they're sort of, they're not really going to be a tremendous indication of anything. But we're still in 30 fear on the crypto fear and greed index. Sort of, it's been in fear around a sort of relatively tight range for the past month. It's sort of worth noting that it bottomed out in early March or late February. When we had crypto sort of at the lows. I think it sort of bottomed a little bit after this bottom at the sort of 76,500 level on Bitcoin. But yeah, we've sort of been up at a high 20s, mid 30s level ever since then. Whereas the stock side has been obviously crashing to sort of fresh new lows off the back of this S&P drop. The sort of CNN general fear and greed index has dropped to 4 out of 100. So that is quite a drop. You can sort of see this doesn't. Unfortunately, this one doesn't go back, and I can't seem to get a reliable idea of what it was back in March 2020 on the large sort of COVID drops. I've sort of seen screenshots and bits of text saying that it was 2 or 3 or 4. Wouldn't be surprised if it was around there, but to say we're essentially at the COVID lows of fear seems a little bit crazy. I think tariffs are not quite that scary. They're a sort of negotiating tool, and I don't think the US and China want to sit there forever with 35-50% tariffs on each other, because that is just both of you paying more for goods if you're just going to leave them there and not actually do any deals or anything. If it was just the US side tariffing things, then it could be seen as sort of an aggressive move. But if you're both going to just do it on each other and just sit there forever, then you might as well both take them off or do some sort of deal. So yeah, certainly sort of the stock market and broader market fear and greed being at 4, I think is potentially good indication of a low. Not to say we don't go a little bit lower, but this is sort of potentially a good time to buy. That's why I've been buying a little bit of stocks, and I may be looking to add my sort of extra. I've got about 5,000 in cash, sort of potentially to add to the crypto miner options, which I still see as potentially the best sort of risk reward if we are going to have a decent bull run. But so, what has been causing this, relative strength, I guess, in the crypto side? It is Bitcoin, of course. Bitcoin's down about 0.2%, sort of pretty much flat, depending on which exchange you use. And obviously, if I'm 62% Bitcoin and it's flat, then it doesn't make a huge amount of drop on the overall portfolio. Solana, is doing a little bit worse, down about 5%. Ethereum, 2.4%. Some of the altcoins getting hit quite a bit. Chainlink, 7.6%. Helium, 12.4%, despite the... I just had a look at the metrics, and they are spiking to new highs, sort of daily active users, mobile hotspots, and that sort of thing. So, yeah, very happy with Helium. Not really something that, as I say, if I've got deploying cash, I would be potentially deploying it to the miners rather than buying these sorts of tokens, because I just think the crypto market, there's too many coins, and sort of betting on these individual coins is risky. So a sort of leveraged bet on Bitcoin I see as risky, but somewhat safer, if you like. So Jito is the worst performer of the week, down 20.5%. Some of these are very rocky, and yeah, my sort of bet into the Solana ecosystem certainly isn't going particularly well. Although, as I keep sort of repeating, aside from Radium, really, I think most of these coins are broadly where they would have been if I'd have just left them in, or these positions are where they would have been if I'd just left them in the coins that I was in, your sort of quant and basic attention token and internet computer and that sort of thing. And I wouldn't say I have the any more confidence in them, sort of probably quite a bit less. And then last three, Honey is down 7%, so that's the Hive Mapper token. Metaplex down 14%, and Radium is up slightly for the week. Obviously, they had a hell of a drop over the past previous few weeks. So, yeah, interesting crypto market. Who knows whether we've already bottomed in early March and now going on a global liquidity run. The global liquidity metric that I've been tracking, as I sort of showed last week, has dropped ever so slightly. So, yeah, don't really need to show that just yet. We'll sort of wait for a larger move, which I suspect is coming off the back of all this tariff nonsense, if you like, and the dollar going lower and yields going lower and everything. It sort of frees up money and spurs people into doing stimulus. So we'll see. Leave your thoughts in the comments below and like and subscribe. See you soon.